Talk about macros now. Tanvee Gupta Jain, Chief India Economist at UBS Investment Bank, joins us right now on the show. Tanvee, hi, good afternoon and welcome aboard. First up, I'd just like to understand your assessment of the economy as it is at this juncture. Do you expect, like many others on the street who have flagged off alarm bells, do you also expect India's growth recovery to be delayed, given how the situation is right now?
Well, I would say that the growth has definitely slowed down. In fact, most of the high frequency data that we track are yet to show a turnaround. That said, I would say we are expecting that the economy would start to see some recovery from the December of 2019 quarter. Obviously, the recovery will be below market expectations. I am not doubting the alarm bells which are being raised, and we have seen since the IIP data IIP data got released, a lot of sell side research have been downgrading the India's growth numbers. So yes, there is yet a turnaround. The economy has slowed sharply. We do see recovery happening from December of 2019 quarter onwards, but it will be below market expectations. I'm yet to see any of my consumption indicators showing a turnaround, even though a green shoot was that sequentially auto sales number for the month of October did show some recovery, but unlikely to sustain towards the year end, specifically with regulatory overhang. And even if some inventory buildup happens, should happen from Jan of next year, not over the next 2 months. So as of now, things look pretty bleak at the moment.
And what is your sense on the policy easing that has been announced by the government so far? Is it enough, or will it be affected or offset perhaps by weak transmission?
So I would if you see at year to date, the RBI or the Monetary Policy Committee has cut policy rates by 135 basis points. However, the actual transmission into the real economy has been less than partial. I mean, we would have seen maybe an MCLR rate cut of 40 basis points and weighted average lending rate cut of maybe 35 basis points. So definitely delayed and inadequate. Going forward, I think the effectiveness of monetary policy is going down. What we need is much more effective monetary transmission, which should get reflected in the real lending and the deposit rates into the economy. Obviously, we know the biggest bottleneck is a very high small savings rate, which is leading to a lot of money put by the households in the small savings schemes instead of putting that money in a bank deposit, which is leading to lower bank deposit mobilization and hence inability of the banks to be able to transmit monetary rate cuts. So I would say going forward, the effective policy transmission is that what Indian economy needs, because just cutting policy rates without leading to lower lending and deposit rate is not going to have any impact on the real economy. We still see another room of 15 to 25 basis point rate cut in the December policy, bringing the repo rate down to 5% or slightly lower. But beyond that, I think more and more steps have to be taken towards ensuring monetary transmission.
What about the growth and financial stability concerns? More rate cuts are you expecting them to happen in this fiscal?
So we are expecting one more 15 to 25 basis point rate cut to happen in the December policy. After that, our entire focus is the steps the policymakers will be able to take to ensure monetary transmission of the prior rate cuts, because that is what is meaningful for the economic growth. That said, why we are still saying some recovery is possible, basically one, if the government and the policymakers are effective in ensuring monetary transmission. Second, we have been seeing that the government spending has been picking up pace. So in the June quarter, while the government spending was up 2%, in the September quarter, the central government spending was up 25% year on year. Our expectation is in the rest of FY20, the government spending should be up 20% plus YOY, assuming not massive expenditure compression, even though the fiscal situation remains loose, or the fiscal position remains vulnerable. That should also provide some impetus to growth. And the third thing is, while bulk of the consumption slowdown is already seen and we are yet to see any change in the high frequency data in momentum right now, our expectation is gradually we should start seeing some turnaround happening from the months of December, Jan onwards. We should also be able to provide some positive impetus to growth.
All right, Tanvi, great chatting with you. Thank you so much for sharing your perspective on macros and beyond with us on ET Now.